Hello friends, we'll be discussing an illustration which is related to forfeiture of shares now. So now, when we talk about forfeiture of shares, we basically understand that whenever a forfeiture concept comes into the picture, you ideally mean that some of the shareholders haven't paid up the money which you have called for a substantial period of time. Hence, what do you do is that you cancel their shares and then later on you have the option of reissuing those shares at whatever price you want. Ideally, it is at a lower price. However, all the forfeiture can either happen at par, that means the shares that have been issued at par, premium or discount. Forfeiture can happen for any of these types of shares, or rather any of these types of issues we have done here. So in this illustration, we'll be understanding either of the illustration, or rather any of the illustration that we'll be discussing here forward. We'll be understanding the concept of forfeiture itself, what exactly is the journal entry that we have learned, and how exactly we're supposed to apply that, rather including the calculations as well. So let's start with the illustration and figure out what exactly do we have in this illustration. So let's start with the illustration first. Now in this illustration we are talking about Ram Company Limited, who issued 1 lakh equity shares of rupees 20 each. That means value of each share amounted to 20, which has been described as application, allotment, first, final and third call. So let's figure out how exactly we are supposed to divide that 20 rupees. So an application, out of the 20 we are supposed to take 5 rupees here. On allotment we are supposed to pay up, or rather we are supposed to receive rupees 4. Rupees 3 is supposed to be taken on first call, rupees 5 on second call, and rupees 3 again on final call. Now within this there are certain shareholders who haven't paid up the amount. So let's figure out what exactly do we have, or rather how many shares haven't been paid up completely. Now we have mentioned other details as to what are the people, or rather who are the people who haven't paid up, plus details related to subscription in this question. Let's read it out. They've mentioned that complete amount was called. That means the whole 20 rupees were called here while the call for final call was made. And they figured out 3 people mentioned below, that is John, George and Bill. John had 200 shares who paid only up till allotment money. That means first, final and second call wasn't paid by him. George had 400 shares, and out of that, or rather for those 400 shares, he only paid the amount until first call. Bill, he had 600 shares and he paid the amount only until the second call. Now the subscription that we had received was for 1,20,000 shares, out of which 10,000 were immediately refunded, and the balance whole lot, that means 10,000, were then provided with the another ratio of 1:2. That means for every 2 shares applied you get 1 share here. That means over here 5,000 shares have been already provided, so the balance 95,000 were completely allotted. So let's figure out the calculation of prorata first, and then we'll go with the share forfeiture entries. Now we're talking about prorata working, so we'll again divide the page into 2 sections, that is application and allotment. To simplify it further, we have mentioned the application total, that is 1,20,000, and the allotment total, that is 1 lakh here. Accordingly, we'll do the segregation. The first category is 10,000 shares being refunded completely here. So 10,000 shares were completely refunded. The balance 10,000 was provided into the ratio of 1:2. That means for every 2 shares you have get 1 share here. So it is clear that 50% of the shares were only allotted. Now the balance 1 lakh, we have only 95,000 allotment here. So this is how the total of application is equivalent to the total of allotment, and hence we provide that this thing has been completely modified, or rather this thing has been completely done. To note, in the question they have never mentioned that these people, or rather the people who have defaulted on the payment, are a part of prorata. They might be of complete allotment itself, hence we'll assume that they are a part of complete allotment here. Now the next thing that we'll be doing here is that we'll be understanding how the entries are supposed to be passed. So let's start with the basic journal entries of due and received, and afterwards we'll go ahead with the forfeiture entry. So the first entry that will be passing here is the receipt of application money. 1,20,000 shares were received here, or subscription was received for 1,20,000 shares multiplied to the amount on application, that is 5 rupees. So here as you can see, we have received somewhere around total of 6 lakh rupees, and out of that we are supposed to refund the share value of 10,000 shares. That means 10,000 multiplied by 5 rupees is the rejected or refunded application. So we have passed that entry now. Now, whatever we are expecting here, that means after this refund, we'll be moving around, or rather we'll be moving out the amount of the application related things only. That means whatever application money we are supposed to receive, only that much of money will be moved to the share capital account. So let's move that. The balance will be transferred to share allotment, because that is the excess amount that we have here. So let's figure out what excess amount do we have exactly. So out of the 10,000, we have allotted only 5,000 shares. That means 5,000 application money is still with us, which equivalents to somewhere around 25,000. And the balance 1 lakh shares that we had, out of that also we have allotted only 95,000 here. That means again 5,000 shares multiplied by 5 rupees, that is 25,000 is still there with us. So the total will be 50,000 allotment money that can be used, or rather 50,000 application money that we have can be used while we are taking the allotment into the question. So let's start with that, but before that we'll have to move the application amount to the share capital account. So let's start with the application transfer. So on the debit side of share application, we have a total of 5,50,000 which has been mentioned there. On the credit side, we have share capital, which will only consist of application money of issued shares. That means 1 lakh multiplied by 5 will be equivalent to 5 lakh rupees. So the difference between them is the amount that can be utilized for share allotment credit side, or rather which has been already mentioned on the credit side, that can be utilized. So even if we are supposed to receive 3 lakh rupees on share allotment, in actual basis we're supposed to receive only 2,50,000, because additional 50,000 is already there, which we have already received in part of share application. Now the next entry that will be passing here refers to the entry of allotment due. So ideally we are supposed to receive 4 lakh rupees, because 1 lakh is the issued shares multiplied by allotment money comes to rupees 4. So 1 lakh into 4 gives you 4 lakh rupees here. Now as we can see that when the share forfeiture was supposed to be done, in the question they have mentioned about 3 people, John, George and Bill. Everyone has paid up to allotment. George has paid up to first call and Bill has paid up to second call. That means if we can see, John, George and Bill, all these 3 people have paid allotment money, so we are not supposed to mention any calls in arrears here. So let's start with the receipt entry, which will have shareholders on the debit side, or rather share allotment on the debit side as well. 4 lakh is what we were expecting to receive. Out of that, 50,000 we have already received in the form of application money. So the balance that we're supposed to receive is only 3,50,000. Now the next entry will refer to first call being due. Make sure that the forfeiture is done only when it is supposed to be mentioned. In the question, they have not mentioned anything as to when was the forfeiture done. We have assumed that after all the money was called up, they have started with the forfeiture here. So let's mention that forfeiture at the end of this illustration. But right now, we'll mention all the due, receipts, and in receipts, it will be mentioned whether there is any calls in arrears or not. So let's mention the first call due entry. So in share first call, we're supposed to receive only 3 lakh rupees, because 1 lakh multiplied by 3 gives you a total of 3 lakh rupees. All the adjustments have been already done until share allotment, because that is the only amount that we had which was supposed to be adjusted. So 3 lakh rupees is supposed to be received on first call. Let's figure out how much exactly we have received here, because there are certain calls in arrears as well. Now we'll be mentioning the entry which is referred to receipt of first call amount. Now here we'll talk about calls in arrears. John only paid up till the amount which was referred to allotment. He didn't pay the first call. Rest every other shareholder has paid the first call amount. So that much of amount will refer to calls in arrears. So when it comes to share first call, we're supposed to receive around 3 lakh rupees. Let's mention it on the credit side. That was our expectation. Out of which John, who had somewhere around 200 shares, he didn't pay up the allotment, or rather he didn't pay up the first call money here. So ideally in our bank account, we have received only 2,99,400 rupees. That is the amount we have received here. Now let's move on to the second call due and receipt. Now when it comes to the share second call, we expected 5 lakh rupees. Let's figure out whether we are supposed to receive 5 lakh rupees or there is certain calls in arrears as well. Because now in this also we have George and John both who haven't paid, because John paid only up till allotment rest first, second, third call he didn't pay up. George paid only until first call, so he hasn't paid the second call money. Hence, both these people will be a part of this. So there is John, there is George who haven't paid up the second call money, or rather, we can talk about this specific person, John and George, who haven't paid up the second call money. Because in the question, it was clearly mentioned that John paid up to allotment, George paid up to first call itself. So both these guys haven't paid up, those will be our call scenarios. So in the entry, we're supposed to receive 5 lakh rupees. Now, John, who has 200 shares, didn't pay up the call money, that is second call money, and George, who had 400 shares, he also didn't pay up the second call money. Hence, we have mentioned in the entry call scenarios 1 and call scenarios 2 have been debited here. So that means out of 5 lakh, we haven't received 3,000 at all. That means we must have received somewhere around 4,97,000. So that is the receipt in our bank account. Similar thing will happen for share third call. Let's pass those entries now. Now when it comes to share third call, we are expecting 3 lakh rupees because third call money is 3 rupees per share. Now when it comes to third call, all these 3 people didn't pay up the third call money, so we'll mention 3 call scenarios here. So 3 lakh is what we're expecting. Now every shareholder hasn't paid this amount, or rather these 3 people haven't paid up this amount related to the third call, so we'll mention that calculation now. So in total, we haven't received 3,600 rupees. Whatever that amount is, we'll subtract it from 3 lakh, and balance is our receipt that we have completely received it from all the shareholders. Now after this, the company decided to mention that the share forfeiture should happen. So let's pass the journal entry referred to the share forfeiture account now. Now, the first thing that we'll be doing here is we'll be passing the journal entries, and then we'll explain you the calculation. Now, as this is the total share forfeiture account that we're talking about, so the entry is very clear, that is share capital account debit, as there is no security premium in question, hence we won't be discussing that part. So, share forfeiture account, or rather share capital account debit to calls in arrears to share forfeiture account. Now, this calls in arrears will be divided into 3 parts because we have 3 calls in arrears here. First call, second call, and third call. So let's start with the journal entry first. Now when we're talking about all these journal entries, let me explain you. Share capital refers to number of shares into called up amount. That means number of shares into question which are forfeited. That will be multiplied by the called up amount. Called up amount refers to the amount that we have called up from the shareholders. In this question, we have called up the whole amount of rupees 20. So how many number of shares we are going to be forfeited? That is 1200 shares. Why? Is because 200 refers to John, 400 refers to George, and 600 refers to Bill. So the total is 1200 shares here. That will be multiplied by the number of called up money. That means 20 rupees. So the debit side total is 24,000. Now we'll be mentioning the total number of shares, or rather the first call in arrears, then the second calls in arrears, then the third calls in arrears. We'll mention the total. We already have that total with us. So for first call, only one person, John, didn't pay up the amount. That means 200 into 3 rupees, because first call money is 3 rupees per share. For the second call, John as well as George didn't pay up the money. So 200 plus 400 shares gives you a total of 600 shares multiplied with the total amount. So on second call, the allotment money is 5, or rather the second call value is 5 rupees per share. Now again on third call, John didn't pay up, George didn't pay up, and Bill also didn't pay up. So the total is 1200 shares multiplied by 3 rupees again. So this total we already have in our call scenarios entry that we have passed. Now the last credit that we have mentioned, that is share forfeiture account. That refers to amount which we have already received for these many shares. Now when it comes to John, he has paid only up till allotment. That means 5 rupees of allotment and 5 rupees of application. That means 5 rupees on application and 4 rupees on allotment he has already paid up. So that is the amount we'll receive. Let me show you the working here. So John, George, and Bill, 3 sections have been created. How much money they have already paid up? John has paid application and allotment. That means 4 plus 5, that gives you a total of 9 rupees he has paid up. So if you multiply 9 with 200 shares, that will give you a total of 1800 that he has already paid up. Now for George, he has paid up until first call. That means 5 rupees on application, 4 rupees on allotment, and 3 rupees on first call he has paid up. So let's total that. That will be 9 plus 3, that will give you 12 rupees. And for bill, he has paid up until second call. That means this 12 rupees what we have already calculated plus another 5 rupees on second call, that will give you 17 rupees he has already paid up. That means a total of 16,800 we have already received. Hence that is our profit. We are transferring it to share forfeiture account. Now the importance of the share forfeiture account is whenever these shares are reissued in near future, if they are reissued at a discount, that means whatever loss is there will be adjusted using these account, or rather this specific share forfeiture account, only in case if they're reissued at a discount. Mostly the reissue happens at a discount itself, but in case if it is happening at par or at premium, then it's a different case altogether, but mostly it happens on discount itself. So here we mark the closure of this specific illustration. I hope this video has given you a clarity about the basic details that you need to cover up when it comes to share forfeiture entry or share forfeiture account. So thank you for watching this video. Stay tuned with Ekeeda and keep subscribing to Ekeeda.